Okay, hi everyone. Welcome to Introduction to Range Bars. So this would be part 1 of the beginner trading series. So for those of you guys who are here with us, a very warm welcome. I'll just wait for about 1 to 2 more minutes for more people to stream in before we get the session started. So along the way as well, if you guys have any questions with regards to range bars or even just doing technical analysis in general, right? Feel free to put them under the questions chat. I do have the chat box as well as the Q&A box open. So I'll just give it about 1 more minute. Right, so for those of you guys who are here with us, I see that we have quite a few of you here. So very nice to meet all of you guys. Okay, so as always, if you guys have any questions, do put them under either the Q&A box or the webinar chat box, right? So either one works. Okay, let's get the session started. Okay, so those of you guys who just joined us, we are doing Introduction to Range Bars today. This will be a 30-minute session. So we'll be covering the basics of range bars as well as looking at what are the ways we can look at range bars and how we can trade them. Okay, so let's start. Right, so just a quick introduction of myself. I'm Lee Sing. So I provide FX advisory to institutional clients. I'm also part of the team that's recognized by the Technical Analyst Awards as finalists for the Best FX Research. So if you guys are here with us live right now, do put your questions under the questions chat, right? So along the way throughout the session, if you guys have any questions, feel free to put them under the questions chat. If you're watching a recording of this, feel free to reach out to me on LinkedIn as well with regards to any of the content presented on Wednesdays, Thursdays, or Fridays, right? So if there is, on Wednesdays, we do cover live trading session. And then on Thursdays, which is today, right, we have our educational series. So right now we are running a beginner series targeted or more for people who are new to trading. And then on Fridays as well, we will be having our live trading session where we will review the setups that were made. At the same time, we will also be doing a price action masterclass at the end of every month. So for this, it covers more on smart money concepts. Okay, so yeah, so for the disclaimer itself, right? So the information presented over here, it's not to be treated as investment advice. It's for educational purposes only. So before I hop in onto the slides and the agenda, right, let me just bring up the website. So for those of you guys who want to find out where we can see the webinar schedule, right? So the webinar schedule, the speaker, as well as the topics that are being covered, you can just go to vantagemarkets.com. So let me just bring this up in a moment. So you can just go to vantagemarkets.com under the, oops, sorry for that. So under their website, I'm not too sure whether you guys can see this. I hope you can see this, right? So essentially, in this case, okay, I can't seem to show this, but just go to vantagemarkets.com under education and tools. Under education webinars, you should be able to see the topics that are presented. Maybe I'll just show this here. Okay, there we go. So under vantagemarkets.com, just go to education and tools, educational webinars. Yeah, so you can see the different topics that are presented. We do have a webinar, at least one webinar every day, right? So for today, you can see that this is the range. We do have a live session later on as well. So you can check out the speakers here as well as the different topics that we will be covering. And at the same time, right, just before I dive into the agenda, the webinars are also recorded. So if you do want to do a review of the session, especially for the live analysis, or if there are specific topics that you like and want to review them again, you can actually hit to this page, right? You can see all these recordings here. So they're posted on YouTube as well. Okay, so this is the agenda for today. So we will be covering on range bars, right? So the basics of range bars, how they are being constructed. And then we will also be moving on to a range bar chart, right? So essentially understanding and trying to read range bars. And we will finally take a look at different ways that we can trade range bars. So in terms of trading range bars, we will be looking at combining mainly on trend lines as well as support resistance levels. So let's first start off with how a range bar is being constructed. So unlike the conventional Japanese candlestick charts that we have, so Japanese candlesticks itself, they plot price against time. So if you're on a 1 hour chart, for example, right? So in every hour, it shows the open, high, low, and close prices within that hour. Whereas for range bar, the main difference is that they represent a specific range of price movement. So it doesn't matter the time component of it. So for example, so take a look at this picture that we have on the right. So essentially what this shows is that whenever there is, in this case, right, so the range bar or this range itself, the specified range movement will be set by the user. So in this case, for example, if we set it to 10 pips, what this means is that when price move 10 pips above or below its high or low, right, it will construct a new range, a new bar. So in this example, you can see that each bar itself are of equal length. They basically represent a movement of 10 pips. And when price move beyond that range, a new bar is being constructed. So how is this useful? Well, for one, it's independent of time. So it helps us to filter out the price movements, especially price movements that are within this smaller range. So for example, this range bar also shows that when price moves, so let's say if it's at 10 pips, right? This range bar is 10 pips. A 5 pip movement itself would not construct a new bar. So you need price to move. So if you have a starting point of 10 and you're setting a range bar at 10 pips, what this means is that you need price to move at least 20 pips. I mean, at least to 20 or below, right, to 0. So it has to be above this 10 pips difference in order for a range bar to be constructed. And this is useful, right? Because if you take a look at range bar in general, you can also identify key levels that prices are on, because these are the levels that prices spend more time on. So for that, I will dive deeper into support resistance level in the later part of the slides. But the idea is that coming into these key levels, you can see just looking at the way price moves itself, when prices are moving, or rather when you have multiple bars that are just trading near each other, what this shows you is that there's volatility over here, right? So the more number of bars are printed, it shows that there is a higher volatility. So what this also suggests is that at particular price point, you can see that there is this areas where it comes in with higher volatility. So we talk about the Japanese candlestick charts and the difference between them and range bar. The main difference is that for Japanese candlestick charts itself, they draw price movements, or they display price movements with respect to time. Whereas for range bars, they are based mainly in terms of how price move without the time component of it. So this is useful in helping us to filter out noises. And you can see that when there are more bars essentially over here, it represents periods of higher volatility. If there are less bars being printed, it represents periods of lower volatility. Another benefit of range bar itself, it's easy to visualize its trends. So take, for example, you can see these 3 bars that we have over here. What this shows you over here is that there is 3 consecutive green bars that's being printed. So these are bullish bars. It shows a bullish trend. And more importantly, it shows that prices are barely near the previous close, right? So this is, it represents a strong bullish movement. And you can see that unlike areas where we saw this movement, right? So where prices are, we have high number of bars with a low range here, right? In this case, you can see that the number of bars itself, it's much lesser, but at the same time, right, the range that it covers is much wider. So it's easy for us to visualize the trend. And what this also suggests is that when you are drawing trend lines, so using support resistance levels on range bars, it can give you very clear support resistance areas as well as trend lines, right? So it helps us in filtering out the noise. So this is basically how range bars are being constructed. So the next thing that we want to look at would be looking at a range bar chart and trying to make sense of what it means. So as we have covered earlier, right? So essentially, one bar itself represents the price movement within a range. The range would be set by the user. So in general, this range itself would vary across different instruments. So if we take a look at Forex, right? So usually how we determine the range itself, this is of course based on your own preference. But let's say in general, right, what you can do is to identify the average true range. So this would be using the ATR indicator. So essentially finding out the average true range within the day, for example, right? So what this shows is that what this shows over here is that it suggests what is the average range that prices move within the day. So let's say if prices move 50 pips within a day, or maybe even 100 pips within a day, right? In this case, you want to set your range maybe at a certain percentage of this ATR. So let's say if it's 100 pips movement, you want to consider maybe putting a 5 pips or 10 pips range over here, right? So whereas for more volatile FX pairs, if it's moving maybe 300 pips a day, you want to consider putting a larger movement so that it helps you to filter out any small movements. So in this case, if it's 300 pips movement, you want to consider putting maybe 30 pips for each range, each bar over here, so that only when there is a 30 pips movement is significant enough to create a bar. So those are things that you can consider, right? So within one way would be using the ATR. So you can actually find this on TradingView, right? So just load the ATR indicator and you can take the average true range on the daily time period, for example, and then use that to determine your range bar size. And once you determine that, you can set it on TradingView and it will create the bars. Okay, so this is just on setting the range size. But if you want to use a default, I believe the default when you load a range bar chart, it's 10 pips. So just something to consider when you're using a range bar size. Take a look at what's the volatility like. If there's one with higher volatility, you want to consider setting a wider range because it helps you to filter out small movements. So for example, a 5 pips movement on, let's say, euro dollar would be more significant if it's of a lower volatility as compared to a 5 pips movement on, let's say, maybe pound kiwi, right? Or even more volatile ones like dollar CAD. So yeah, so just something to consider for price range. The next thing we want to consider would be on bullish and bearish bar. So for bullish bar, right, so the idea works similar to a candlestick pattern, right? So you can see that for bullish bars, they are usually denoted in green over here. So these are the bullish bars and prices close higher than it opened. So that's kind of the same idea as what we have in the Japanese candlestick pattern. For bearish bars, prices close lower than it opened, right? So those are the bearish bars. They're usually denoted in red. We take a look at the formation of another bar range as well. So when price moves over here, so take a look at this two example. So assuming that you have a range set at 10 pips, what this means is that if price moves beyond the 10 pips range, it creates the second bar that we see here. And what this shows is, again, right, for the third bar to be created, we need price to move beyond the high or the low. In this case, it will be high, beyond the high, right, by at least 10 pips, creating this new bar here, the third bar. So what this also suggests is that you can see the trend by itself, right? So when you have 3 bullish candles, it shows strong bullish trend, right? Buying pressure upwards. Whereas if you have, for example, bearish candles represented here, it shows you strong selling pressure, right? So you need price to go beyond 10 pips, beyond the low of this to create a new bar. So one more thing to note is that take a look at this candle here. So let me just erase all this, right? So let's focus our attention on this candle denoted by the arrow. So in this case, you can see that when we have a bullish candle that's formed before that, again, for this bullish candle to be formed, price need to close at least 10 pips, or rather price need to move at least 10 pips beyond the last high here for it to be considered bullish, for the new bar to be formed. And once this happens, you can see that in this case, again, right, it has to move beyond the set price range in order to form the new bar. This bar itself would represent selling pressure, because how we can read this is that essentially price moved beyond the high of this area itself, right? But it's not able to fully form a new range that goes slightly higher. So when price moves beyond, let's say, the 10 pip range, it created a new high, but you can see following which, right, this wick, it's also, it closes higher, but you can see that essentially this candle itself, it's bearish, which means that there is selling pressure and price push lower. So when you have a bearish candlestick or bearish, candlestick, but bearish bar that's that has a wick above the previous bar and then close below, right? But this shows you is that there is selling pressure over here. So this is the formation of the different range bars and how it can show you whether prices move higher or lower by comparing it with the last bar. So one more thing to note is that so we covered this, right? So for consecutive bullish bars, essentially it will show that prices are pushing higher. It's also a bullish trend, essentially, right? So consecutive bullish bars will be represented by these moves. You have your bullish wick, which signifies buying pressure. We talk about this specific candle as well, which shows that prices move beyond the previous bar's range, thereby allowing us to form a new range bar. But what it also shows is that it fails to fully form a bullish range bar, right? It comes in bearish because what happens is that prices actually moved much lower, so there is selling pressure coming in. So bullish wick signifies buying pressure, your bearish wick would then signify your selling pressure. Okay, so I hope so far it's clear. So next we will be taking a look at trading range bars. So essentially we will talk a bit more about setting a range bar size, right? So in general, the ones with higher volatility would require a bigger range. And the way you can think about this is that we want to make sure that when you have a specified range, this range itself, it's enough to help us to filter out price movements, so to only record the significant ones. So in general, for a range bar size, right, let me just bring up TradingView and we can take a look at that together. So let's say here, right, so let's take a look at this. So this is on dollar CAD. So let's say if I'm on the daily time frame, you just want to load your average true range. So you can see on dollar CAD, right? So the average true range, it's at about 120 pips, right? So how you can read this is that you just take a look at the fourth decimal place. So when price moves by 0.0001, so that's a fourth decimal place. So here, right? So this is considered 1 pip. So when I hover my mouse around this, we have 0.0116, right? So but if this is 1 pip, right? So if this is considered 1 pip, this is around 116 pips. So let's take an average. So 120 pips over here. So let's say if we round off to the nearest 10th, 120 pips. So what this shows is that on average, right, the average true range, the volatility of 1 day's movement, it's around 120 pips. So in this case, right, if you have 120 pips, you want to consider taking 10 pips. So 10 pips would be the range size. So if we want to set 10 pips as the range size, what you can do next, it's if we want to switch to range bars, right? So you can click on range. So I'm currently on TradingView, right? So click on range. So 100R is 10 pips. So you can also check the price movement here, right? So you can see that each bar should be of equal size. So equal size here. So again, if I have to hover around this bar and read the open, high, low, close prices that we have over here. Let me just change this. Right, so if I take a look at the OHLC values, you can see that just this bar alone, right? So focus on this portion of the chart, the top left here. So if you're not sure about the range, right, you can just hover around the range bars and you can check this. So you can see that essentially the high itself, the high of this bar, it's at 1.35769. The low of this bar is at 1.35669. So this is exactly 10 pips. So essentially what this shows is that at every 10 pips, right, if price move beyond that 10 pips range, then it forms a new bar. So this is one way you can set the range size. And essentially you can see this range bar chart that's being formed here. Okay, so this is for setting the range size in general if you have higher volatility, which means that if your ATR, it's a lot higher. So in the same example that we used earlier, right? So that's on $CAD. If you have an ATR of maybe, let's say 300 pips, you want to consider setting a bigger range size because 10 pips might not be as significant, right? If the currency pair, it's more volatile. So if you have a less volatile currency pair, right, a 10 pips movement itself would be a lot more significant compared to one with, let's say, 300 pips ATR. So we also showed how we can use this ATR. So essentially using the ATR that we saw on TradingView and how we can use the ATR to determine our range size. Usually it's taking a percentage of the ATR. So maybe you want to consider taking maybe 5% or 10% of the move. And one more thing to note, it depends on our trading style. So in general, if you are taking more swing trades, right? So essentially these are ones where we want to look for big significant movements. In such cases, it might not be a good idea to set a small range, right? So you want to consider a bigger range because a bigger range helps you to filter out, and only new bars would be formed when price moves beyond that range. So let's say if you set a 50 range, you can see that only when price moves beyond the high and low of the 50, at least by 50 pips, then it will form a new bar. So for swing itself, you want to consider a bigger range. But if you're scalping, right, then this is when volatility becomes important. You want to filter out the small movements. You also want to consider setting a narrower range. So in general, right, if you take a look at the same picture that we have on the left, so in general, when you have more bars that are being printed, for example, over here, it represents higher volatility, right? So more bars that are being printed within this or within the same length, for example, as compared to maybe let's see here. So more bars being printed in general represents higher volatility, and less bars being printed would represent low volatility. One thing that's useful about range bar chart is that it helps us to identify price points that prices are spending or prices are within that area where you see basically high volatility, right, represented by the number of bars. So we will again take a look at this example on TradingView. Right, so you can see that this is useful for scalping strategies. In general, when you have less bars being printed, you have much lower volatility, whereas more number of bars being printed would represent higher volatility. So I'll take a look at the same example that we have here. Let me just remove all these drawings. Okay, so take a look at this example on $CAD, right? So this is a 10 pips range. Let me just remove the ATR as well. So one way you can use this is to take a look at the price range. So you can see, for example, so this would combine support and resistance concepts. So just a brief overview of what support and resistance levels are for those of you guys who are not familiar with it, right? So essentially support levels, what we're trying to look for are horizontal key levels where price span a substantial amount of or interacted multiple times with this zone. Right, so if you're on the candlestick pattern, you want to see price essentially interacting with this zone many times, right? So what this shows you is that when it comes into this price level, essentially you have buyers coming in to push prices much higher. So this is the idea of support level. You do have a few support level that we can look at. So these are the different patterns for support level. One, it's of course a V-shaped recovery where we see price coming into this region and a significant rejection of this level the first time. The other type of support level that we have, it's basically a level that was the previous resistance. So let me just remove this drawing. Right, so the other one would be one where price came in, you see it rejected off multiple times, essentially sellers coming in to push prices lower. But right now what happens is that when price breaks above it, you have a lack of sellers coming in to absorb this area, right? And buyers just pushed on much higher. So this is the other type of support level. So essentially, these are the two kinds that we have. In this example itself, you can see that this area over here, so if I were to just draw a horizontal line across, you can see that at this price point, so this is at about 1.3520 level. So one thing to consider is that in general, bigger players like the numbers that end off with either 20s, 50s, and 80s. So this is something you want to consider when you are looking at specific levels, right? So 1.3520, this zone itself, you can see that this area was one. If you take a look at the range bar, you can see that at this zone itself, there's a lot of volatility coming in here, right? So this range bar, you can see how prices move. And the first time with significant rejection of this area. And then again, over here as well. So you can see just how many times price came and interact with this zone. And every time it comes into this price level, you can see how prices are reacting here. Just looking at the number of range bars as well as how it tends to hold above this level. And then again over here. So this is one way you can take a look at range bars and then also identify your support resistance levels to see how prices are reacting when it comes near this level. Let me just close this moving average so that we don't, there is no relevance to what we are saying right now, which is why I'm removing the moving average. And then again, right, one more thing to note is that apart from just drawing horizontal levels, so you can see that this is another horizontal level with this movement, right? So again, prices coming in and just rejecting off this level, spending again, revisiting this level. So this is at around 1.3576. So again, if we were to use round numbers, this would be at 1.3580. So this would be this range, right? So this zone essentially. So you see the same thing, right? So price coming in near this zone again, and how when we come near this levels, right, you have more bars that are being printed. Again, what this shows is that coming into this area or this price point, right, you have a lot of volatility here. Of course, we also have to consider the different levels, right? So you have this level, for example. So apart from just drawing horizontal levels, one more thing to note is that you can also draw trend lines. So trend lines can be very useful, right? So take a look at this. So for this example, you can see that this is, for example, a descending trend line. You see how prices react to this area as well, coming in to test it. Let me just remove all this and I'll just draw the descending trend line. So you can see this area, right? So it cuts it very neatly. You can see this descending trend line. Let me just adjust this. So essentially this area, right? So apart from just using horizontal levels, you can see the same thing for trend lines. So it's generally very neat. So price coming to test this level as this area as a resistance. So this is another way you can use range bars. Okay, we have a request for using, can you do demo for this type of chart for Go? Yep, sure. Let's take a look at Go. So let me just remove all of this. Drawings. Okay, so again, so we don't have much on Go, like just looking at the range bar chart. So this area over here, you can see that this region. So you see this area here, right? So again, as much as possible, I want to try and use either round numbers, so either ending with 0, 0. So in Go's case itself, right, this would just be 1776. So you can use 1775.80 or 1776. So in this case, I'll just use 1776, but that's the idea, right? So just keeping it to the round numbers, but understanding that this is more really of a zone here, right? So instead of just a specific level, this is an area of interest. So you can see this level again, right? This price point, and just how many times price actually came and interact with this previously. If you see the range bars, you can see that we have this. And then again, right, coming near these levels, you see again coming into this region, areas of high volatility represented by the number of bars. Again over here, right? So even when price traded higher, it came back into this region. You see the same thing happen again here. And then price trended much higher. We have this coming near this area, but not exactly on this zone. And then finally this region here. Okay, so this is one thing to note for this range, right? If we were to take a look at just trend lines itself, you can see that it is still in a downtrend. If you take a look at this move here, right? So this range, and then if you want to identify resistance, you can see that this is the area, right? Of course, this one, it would have been ideal if we have a lot more interaction, but in this case, you can see that this would be one area here. So again, right, 1781.27, I'll just round it to 1781, understanding that it is again a zone instead of just a specific level. Okay, so this is more of a range that we're looking at. So I would say that this would be the two range or the two price point that we have over here, right, as well as this descending picture. Okay, so I hope that this helps. Okay, so so in summary, what we have covered so far, right? So we take a look at how range bars are being constructed. The most important point to take away from here is that unlike Japanese candlestick charts, right, range bars are constructed independent of time. So they are constructed based on our specified price movement. So if you want, for example, a specified range of 10 pips, which means that price has to move beyond that in order for a new bar to be constructed. We also take a look at how we can read range bars, right? So essentially, more bars being printed means one with higher volatility. Less bars being printed would be one with lower volatility. If you take a look at the consecutive bullish bars, it shows you a bullish trend. And then if it's a consecutive bearish bars, it would be a bearish trend. So yeah, so it's vice versa, right? And then finally, we take a look at trading range bars. So the most useful point I would say over here, it's identifying horizontal support resistance levels and range bars, looking at how price comes into this areas, right, this price point, and also keeping in mind this round numbers. So usually if you are on FX, right, try and take a look at numbers that end with 20, 80s, or 50s, or even zeros. So this would be price points we want to look at, and you can see how price interact with these points, right? So if we take a look at the same example that we have covered, right? So on gold, just now this example that we have, you can see how price coming into this region. You have these areas over here where you have this range, the higher number of range bars being printed. So what this suggests is that there's activity coming in near this point. Okay, and then we take a look at trend lines as well. We saw how trend lines hold and range bars, right? So looking at descending lines as well as on dollar CAD, the same example earlier. Over here, right? So this area as well. So you can see how bars are range bars itself, it tends to filter out the noise and you can draw neater trend lines, horizontal levels as well as diagonal levels. Okay, so this is a summary of range bars. We will be covering part 2 of it during next Thursday session. And then for tomorrow as well, we will be covering our live trading session. So for this, we will hop onto the charts. We will also show how different setups and review setups that were taken or setups that were called yesterday. So yeah, so for that, you can go on to vantagemarkets.com. So if you do want to sign up for these sessions, just go to vantagemarkets.com, and under webinars, you should be able to see the different schedules and the sessions that are covered. Okay, so with that, I think we have answered all of the questions here as well, right? So thanks everyone for staying with us till the end. We will catch you guys again tomorrow for the live session, right? And thank you and trade safe.